I'm gonna be talking about the golden egg of our generation, which are self-directed retirement accounts. My name is Cornelius Henderson. I'm the managing partner of Cooperative Solutions LLC. We're a real estate development firm based out of Washington, D.C. You can locate us for the purpose of this topic at isyourmoneylazy.com. Just quick legal stuff to get out the way. The information presented in the video is for educational purposes only and should not be construed as tax, legal, or investment advice. Whenever making an investment decision, please consult with legal, tax, and accounting professionals. All right, what is the self-directed retirement account? Basically, a retirement account allows an individual to invest in not just stocks, bonds, mutual funds, and CDs, but also real estate, notes, private placements, tax liens, companies, and really much more than just that. Essentially, just a quick story. Like I get all these wealth advisors calling me all the time. The last one actually called yesterday from Morgan Stanley, and I said, "Yeah, can I self-direct my retirement account?" "Yeah, sure. We've got reach." I said, "No. I want to buy a house and I want to invest in one of my friend's companies in his business." "Oh no, we can't do that." And essentially, the reason why you've never heard of these types of accounts is because Wall Street, they don't get a cut of it. And I hate to put them on blast, but they push products that they have a financial interest in somewhat on the back end or on the front end. And Wall Street's not gonna, when you are dealing with self-directed IRA accounts, we can get into all the nuances later. But you essentially pay, an asset management fee once a year, and that's simply it. And then you make whatever returns you make. There's no continual fees and things of that sort. So Wall Street doesn't get a cut of it. So that's why you've pretty much never heard of these type of accounts. Um, for you technical folks who are like, "Oh, this is crazy. I've never heard of it." You can go. There's other IRS publications that talk about different other aspects within working around self-directed IRAs and retirement accounts. But IRS publication 560, IRS publication 590, and IRS publication 3125 are kind of linchpins for where you can start to prove what I'm saying is valid if you're if you're just one of those type of people who have to have that kind of information. And I am, because I did look at it when I first found out about it, because I was like, oh my goodness, this is crazy. Your permitted investments, let's run down these really quickly. Residential commercial real estate and promissory notes, which is the area that we focus on, private limited partnerships, LLCs, and C corporations, tax lien certificates, foreign currencies, oil and gas investments, stocks, bonds, and mutual funds, naturally, if you want to stick with that, private stock offerings and private placements, judgments and structured settlements, gold bullion, car paper, factoring investments, equipment leasing, horses. I've seen an investor who's invested in horses to his IRA, and basically many other options. You can do whatever you want as long as it's not a prohibited transaction, which the IRS does detail. We're not going to go through that in here, but the reason why this is important, why I talk about permitted investments, is for most of these, this is outside of my range of what it is that I personally know. And it leads us to basically our primary benefit. And Warren Buffett said, never invest in a business that you cannot understand. Me, I understand real estate. It's especially, living in the District of Columbia where, people, if we're not familiar, we have one of the top five markets because of the federal government in the country. And kind of like Manhattan, they're not making any more of it anymore, DC. So the investors who have been active have been making great money, really have not been squeezed by the recession that the rest of the country has kind of felt. So, that's my bread and butter, real estate. I understand it, I know it, and I rather invest my retirement and the things that are most important to me in terms of my cash, my financial stuff, and things that I personally know. And I know that no matter what, real estate never goes to zero. Even if a house burns down, you have the land underneath it. So unlike a stock, which many of us have felt before, can go to zero. Real estate can't. It's a tangible asset you can see and find. So that basically is the primary benefit. And self-direct retirement accounts allow individuals to invest in what they understand rather than competing with Wall Street. I can't compete with this guy with a Wharton degree with unlimited resources, three computer screens, can I can't compete with him on a stock. You think I'm gonna get more information than that guy, than that analyst? Are you kidding me? Come on, like, I'm not gonna do that. I'm gonna, one of the popular things in horse racing is you be a big fish in a small pond. You go and you compete on smaller tracks, and dominate, that arena that you're in. Self-directed IRA accounts, and retirement accounts, they allow you to do this. Other benefits, which are actually phenomenal. You get your compound interest naturally. You get tax deferred or tax free profits. The last one is what I'm focused on. And if you think you're phased out of Roth IRAs, you haven't really explored all the benefits of all the tax-free accounts that are possible out there. And I'm focused on the tax-free, meaning the Roth accounts, simply because higher taxes and inflation are the two biggest risks that we have as a result of the deficit in our country. So I personally would rather pay my taxes and my lumps right now and then compound it tax free for the rest of my life when we're talking big chunks of profits in those IRAs, and retirement accounts. Large tax deductions depending on your plan. It's up to 50,000 or more depending on your plan that you're working with. Your assets are protected from creditors. A lot of people wonder how sometimes people get in, like, let's just say, for instance, O.J. Simpson, how he basically lost everything in a civil suit. His pension from the NFL was protected, and essentially that's what he was living off of. Your retirement plan is a protected asset from creditors. They cannot get to that. Basically, wealth for future generations. A lot of plans, when you structure them correctly, they have very great tax benefits when passed down to your heirs. So these are just I love number two, the tax free. If I haven't stressed that enough, but there's all kind of benefits to self-directed retirement accounts, and this is essentially what the wealthy are using. This is the golden egg of our generation. It's only been around for 30 years, and who all knows how long it's going to be around, quite honestly. So take advantage of it now. In conclusion, visit isyourmoneylazy.com/self-direct and obtain the our guide to self-directed retirement investing. This is a guide that was produced by the company that we use, Custodian, that we use personally that I use personally for my account. I use personally for my accounts. One of my first account. Um, Additionally, we want you to search us on Is Your Money Lazy? Search Is Your Money Lazy on Facebook and like our page. When you like our page, we're going to send you a free ebook entitled How to Achieve Your Own Financial Independence. It's really important because a lot of people think financial independence is this pie in the sky. I have to have a Lamborghini and a house in Turks and Caicos. It's far from that. And really, once you start putting, small little darts on the board daily and weekly, you'll see how quickly you will become financially free. Trust me on that. All right, look forward to working with you in the future, and stay tuned for more videos from us.